Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market down 3.14%. We're still up year to date, 1.89%. We are now back below the February highs, 1.98%, but we're still up from the lows in March, 48.35%. So the main movers of the market this week was the Fed notes and their meeting afterwards and continued volatility around the election. So Rich, do you briefly want to talk about what happened with the Fed this week and why it impacted the market?
Yes, well, the Federal Reserve stated that they're planning on keeping interest rates low, at least through possibly 2024. And that's because they're not expecting the economic activity to be great enough above their 2% average till then. And that's good news if you're buying a home and getting a mortgage or refinancing. It's not good news if you're interest from fixed income securities, but it's something that's affecting the stock market as we speak.
Yeah, so I think one of the questions around that, particularly is if the market was already pricing in, you and I have been talking about for weeks, maybe even, a month at this point, how we believed that the Fed was going to keep interest rates at zero for at least the next 2 years, maybe even longer. Why was the market surprised by this? And the real point is not about keeping interest rates that low. The market was expecting that. The market was not expecting the other pieces that the Fed said about the underlying economy and how long they were expecting for the unemployment rate to get back to 4%. I think we were seeing in the market semi-pricing in the best case scenario of we were going to continue this, unemployment was going to continue dropping, early, maybe even summer of next year, we're going to have the vaccine widely spread and we're going to have full up and running economy. And, Powell basically said, that's not what we're expecting by any means. We're not expecting unemployment to get, to 4% until, 2-3 years from now. And I think that surprised the market a little bit and is partly why we saw a sell-off after that and continued on Friday.
Yes, I agree with that. And that's a very good point. We have some rumblings with trade war, the fact that TikTok is going to be banned for US users starting this week. I think that's had a negative effect too, because China has said that they were going to retaliate for any negative activities from the United States. So that didn't help things.
Yeah, so I think those two coupled together definitely put a negative pressure down on the market. Now, the other thing that we are continuing to expect, obviously happened this past week, has happened this week, is increased volatility until the election, maybe even afterwards.
Agreed. And, when there's been some surprising resilience in the economy, retail was slightly better than expected sales, but, nobody quite knows what's going to happen because it's basically the pandemic. And we've had all of these hurricanes, wildfires, climate issues that have affected the economy. And I think that that's added to some of the uncertainty as well.
Yeah, so I definitely believe that we're going to see increased volatility until the election and possibly even afterwards for a decent amount of time. But I think one thing that is worth noting, especially with interest rates being this low, in some ways it feels like where else are you going to put your money? There's, to some degree, there is a support or resistance level on the stock market and where it is, because at some, am I going to take my money out of stocks and go to fixed income and get 0% interest? That doesn't make a lot of sense. And so to some degree, we do believe increased volatility, but we're not expecting a extreme market pullback to what we saw, earlier this year. So I think that is important to highlight, that yes, increased volatility, not a full panic sell-off like we saw earlier.
Yes, I think that's a great point. I also think it's a good point to say that, there's been some discussion about fiscal stimulus from Congress, but nothing has really materialized. I think the stock market has factored in on the pricing that there won't be any fiscal stimulus. So if there is, we can expect a rebound in stock prices, but that's not expected at the moment.
Yeah, if we just take a broader look at what the market could have been pricing in at certain points in early August, obviously Congress had just shut down, but we were all pretty certain that we were going to get some next round of stimulus at some point. And we saw the market continue to rise, even though we didn't see any stimulus come through. In some ways, this could just be the sell-off that we saw from the market pricing, and we were going to get this stimulus, and it never happened. And now we've seen that reversal. So this isn't an extreme sell-off. This isn't something that we view should incite panic of any means. It's the market was extended, it was frothy, and it was pricing in some pretty good scenarios that now it looks like aren't the reality. But as Rich said, if we get that next round of stimulus, we expect that will boost up the market. And if we don't think it's going to be any shock or surprise to the market at this point.
Absolutely.
Well, we want to end as always. Your money's here to support you. We are here to support you. Let us know if you have any questions, and we will see you again next week.